By evaluating Nigeria's economy in the last 20 months, in your own assessment, what is the state of the economy? If according to the Minister of Finance and Coordinating Minister of Economy, Mr. Wale Edun, the country narrowly avoided collapse as after relying on illegally borrowed central bank funds that far exceeded regulatory limits. By numbers and by indices available, are we doing well?
You know, it's an interesting question you asked. We can agree that where we are today is not where we were in 2023. There's been a measure of progress. We can also agree on the fact that about 30.6 trillion naira was raised illegally in violation of Sections 38 of the CBN Act of 2007 that says that the central bank cannot borrow the federal government of Nigeria more than the equivalent of 5% of its real GDP for the previous accounting year, you know, and that between 2019 and 2022, about 17.3 trillion was raised through quantitative easing, where the central bank basically created money that didn't exist and pumped into the system, and it didn't generate enough revenues to equate with that amount of injection, and you could see inflation skyrocketed, and then the central bank had to, you know, go back to see how it can, you know, reduce the amount of cash in circulation. The raise CRR that was 14% when the past CBN governor came in 2014, raised it to an all-time high now at about 50%. I think by the time he left office, it was about 32.5%, if I'm not mistaken, in 2023. But what we cannot agree on is the fact that the origin of the crisis that we had with inflation actually started from the government-owned enterprises not remitting FX that the central bank needed to make balance of payments, and that FX, the Naira equivalent, translated to funding the budgets of the government, and money is being credited to the Consolidated Revenue Fund. And the CBN stepped in and illegally violated Section 38 of the PIA. So if we look at 2023 and look at the fact that the central bank was technically insolvent in 2023, even if this was not very prominent, you know, in the news in 2023, it was technically insolvent. They had over $10 billion in swaps with external asset managers. They had $7 billion in forwards, which has been drawn down significantly below $2 billion. Kudos to the work that the central bank team has done, even if I think they still have a lot of work to do. And even if I think that not releasing the annual financial statement of the central bank in violation of Sections 50, subsections 1 and 3 of the CBN Act of 2007 is an issue that the CBN has to grapple with. You know, in 2023, the government was spending practically 7 trillion naira in subsidy payments, under recovery for subsidy payments. Okay? Now, compared from 2023 compared to where we are today, has there been progress in terms of how the exchange rate system has been managed, the fact that the black market premium was over 30%, the difference between the official and parallel market rates, and the government was paying more than $300 million per month in FX subsidy that it didn't have. The fact that the government could practically not fund its budget. Debt servicing was 32%. But then the question today is, if you look at 2025 Appropriation Act, debt servicing is 34%. Because they are going to spend debt servicing and sinking fund is 16.3 trillion of 49 trillion in 2025 Appropriation Act. So have we really made progress? That's a question that I'm asking between 2023 and date. If debt servicing was 32% in 2023 and is now 34% in 2025 because the government cannot work on its capital formation enough to mobilize revenues to finance budgets and has to rely on borrowing. Have we really made progress? CRR is 50%. Interest rates is over 25%. And with due respect to you, I don't agree with the MBS numbers that says that inflation is down to 23.5%. And the reason I know that is because the CBN operates what they call inflation targeting, which means that inflation to interest yield curve has to be at 400 basis points or 4%. So if inflation is really at 23.5%, the Monetary Policy and Implementation Committee, Technical Committee of the CBN should be advising the MPC to cut down interest rate to 20% or 19.5% because it should stay between that 4% yield band. So the fact that the CBN is not willing to take action on the CPI rebasing that the MBS came up with shows you that in the CPI basket, food still takes about 60% of the income of Nigerians and energy takes up 20%, which means that if you add 60 to 80, food and energy takes up 80% of the basket. And if we're still having like headwinds to the numbers on food and inflation and energy prices, you can see that with the pause or the ending of the Naira-based crude oil swap, petrol prices are now anywhere between 960 and 980 in most regions of Nigeria. Inflation still persists. So, you know, I don't know if I should say we've made progress. Did we come out of a near bankruptcy? Was the option in 2023, to be fair to Mr. President, to have said, okay, we're going to declare bankruptcy, you know, and not meet up with our debt obligations, compared to him announcing that he's removing FX and petrol subsidy? Well, I supported that action in 2023. Was the mode of implementation the best? I would say it was not the best. So, you know, when you look at the numbers and compare it, have we really made progress in the last 20 months? The numbers are not very, very thrilling. They're not spectacular.
So still talking about numbers, Mr. Emmanuel, because economists also say the Nigerian domestic economy recorded significant growth in the fourth quarter of 2024, expanding by 3.84% to reach 22.61 trillion naira. I do not know to what extent you agree with these numbers. Interestingly, also, there's been a lot of efforts by this current administration to tackle the distortions in the foreign exchange market. How much impact have these efforts made in stabilizing the Naira? And evaluating these efforts by Mr. Yemi Cardoso, have these efforts yielded the desired results?
So, you know, to the extent where we can say that the central bank has, you know, worked very hard to sterilize its loans, drawn down on forwards for capital and dividend remittances from at $7 billion in forward, it paid down 4.6. Then there was 2.4 that was hanging for a period of time since last year, and then it just resumed drawing down on the remaining $2.4 billion, even if a lot of the companies on the receiving end had billions of naira in overdraft charges that they had to settle with their bankers. Okay, the fact that there was a migration from a managed float towards the Nigerian foreign exchange market system that was based on, you know, a matching system that is being operated by Bloomberg that ensured more transparency, and are seeing an influx of, you know, FPI investments into Nigeria. We can say that there has been a significant uptick in the amount of FPI flows. Well, then the question you have to ask is, do you want an economy where hot money is coming in and staying for 12 to 24 months and is putting up forwards to hedge risk so it's able to take monies out when it wants to take monies out, and is looking at the exit door at the same time it enters, because it's more concerned about the exit than it is about the entry. It's easy to enter, it's not easy to exit, as we've seen in Nigeria over a period of time because the issue of issues around the foreign exchange market, the lack of liquidity. The fact that we have a non-deliverable forwards market that is not liquid, where people basically cannot pay a premium to hedge the rates that they want to enter the markets at, and because of that, they have to resort to speculative means of buying FX and putting in their domiciliary accounts onshore. And you can see that there are about $29 billion onshore held in Nigeria. We can say that we've seen stability in the FX markets, okay? And this is also credit to the CBN for introducing harmonized reporting for net open positions for banks, especially Tier 1 banks. They had about $5 billion offshore they were using for speculation on the foreign exchange market. The implementation of this B matching system has seen like them like exit all of those net open positions long of 0% long that they had in onshore that was helping them to speculate on the rate and move increase the volatility index significantly. So yes, there's been progress. Yes, you've seen an uptick, but when it comes to the net external reserves of the central bank, that is not encumbered. Okay, when you look at the net asset ratio of the external reserves of the central bank, it's not great. The net external reserves is supposed to be significantly above your balance of payments for 1 year. So for you to be comfortable, you need to have net external reserves that is over $10 billion. I'll tell you that based on the numbers I've seen, based on the realities I understand of the position we're in, we don't have net external reserves that is up to $7 billion. Okay. Maybe it explains why the government is looking at going the route of another forward sale agreement to raise FX to meet up with its pending dollar obligations it has in its payment schedule.
But really, would you say the Naira fortune, I mean, I've heard you, I heard everything you said, but would you say the Naira fortune would have worsened without these aggressive forex interventions, especially in the month of March? Second, would you expect the CBN to continue supporting market liquidity? Is it correct to assume that this will help maintain the Naira stability at current levels in the short term?
So my fear about the FX markets and stability of the market and what I think can threaten the stability comes back to the issue on Dangote Refinery and the fact that, as we speak, is importing around 10 million barrels of crude oil to Nigeria, and the fact that NUPRC has not been able to enforce sections 1094C of the PIA to ensure that the quota of what the refiners need to refine is guaranteed by the domestic market on a willing buyer, willing seller basis. And whenever the refiner has a situation where his balance of payment from net export proceeds for, the dollars he gets from exporting products out of Nigeria, jets, diesel, premium motor spirit, polymers, is not enough for him to sterilize external dollar obligations, and he will have to raid the FX markets in Nigeria in terms of, buy up FX to be able to import or support his, financial instruments that he uses to import products into Nigeria. And that will mean that the Naira will depreciate. So now this calls back to the question. So you have a set of people who say, but if you give the Naira-based crude oil swap, how do you get FX to be able to do your balance of payment obligation? The other side to that conversation is that you get more value when you export derivatives from refining crude oil than you get when you export crude. Okay, so you have net export proceeds in dollars that the refiner brings back into Nigeria that will be higher than what you get if you were exporting crude, number one. Number two, when you have a refiner that is able to satisfy the domestic needs, the energy needs of Nigeria in terms of white transportation fuels, what you have is you prevent other importers or marketers from raiding the same FX market to get the dollar liquidity they need to bring in products into Nigeria. So my fear about the stability of the FX rate in Nigeria, which we've seen over the last 2 months, is that if this issue about supplying Dangote with crude is not addressed in time, like you've seen, prices of petrol has gone up, and that takes about 20% of the CPI basket. You might likely see the Naira will begin to drop again, and that's the greatest threat I see to the stability of the FX markets.
All right, I mean, talking about the Naira for